You're tuned in to Agriculture Today, and we start our Friday show with a grain market update. And as always, we're joined by K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Kicking off our conversation in 2024, like we usually do, with what our future's looking like.
Well, in the minds of ag producers, they're not looking very good. The trend has been certainly sideways on corn prices, and with some weakness showing up on soybean prices in the last few days. And wheat has been up and down too, but they're all pretty much trading in sideways trend, sideways high-low trends that aren't probably helpful for farmers that are looking to sell grain to generate cash flow for their farm operations. Probably not too bad a situation for grain buyers, especially corn buyers, for ethanol plants, livestock feed, etc., livestock feeders and such. In fact, before we get into the actual futures themselves, probably a big issue to be watching for will be on basis levels. Yeah, what type of basis strengthening it's in the sideways grain futures market do you need to see for local grain buyers to actually entice sales? So that's what's coming up. And at the end of this, as we talk, wouldn't be surprised. We should probably talk about a week from today on January the 12th, what may be the key factors to look for in that report that could change the current perspective in the markets. I would say on futures, corn futures, March closed yesterday at 466 and a half. Dees corn up to 498 and 3/4. So interesting to see that you've got about a 33-cent premium. That to me that's indicative of the corn market perceiving risk for 2024. So as you and I go along week by week, we'll be watching to see if that premium, or that, economists get really nervous to call that a risk premium, but if that uncertainty in the market, if that holds the new crop futures above current cash prices, if that recedes or may not recede until we actually get out and start to get in the fields and see what's happening for acreage. For soybeans, 1262 was the close yesterday for the January contract. Of course, that's now in delivery. The March contract, which is the lead at the elevators, 1267 and a half. New crop, November at 1220, 1220 and 3/4 for a close. So that's a different situation than corn. So here you have, from the current higher price, you have the November futures contract, the current high price for March. You've got about a 47-46 cent decline off into fall. So what does that mean? Well, I have been of the opinion, or of the thought, that the markets are thinking that, gosh, higher soybean prices probably will bring a lot of acres in the U.S. and we'll see the downside of huge soybean production in the U.S. later on this summer and on into fall, bringing lower fall prices. Well, we'll see. So you've got corn and soybeans going back and forth on this, and for wheat, probably the good news on wheat is that it hasn't been going down quite as much as it was. Seemingly, we're in a situation where we're perhaps, you wonder if we're stabilizing some. The big ongoing issue week after week is that we struggle for exports in a market where Russia has a lot of quantity that it's pushing out, and what Ukraine produces sells for cash because it has to once it gets into the Mediterranean through Europe. So the U.S. is just finding it really difficult to compete in those export-oriented markets for wheat, and it shows up in the prices. Pardon me. So I think overall you've got a situation where the markets are waiting for new information, pardon me, and when that comes, probably the next chance of that happening will be unless it's some great surprise way outside of the realm what we're expecting, we'll probably see what the USDA is projecting on January the 12th, and see if that changes things appreciably enough that the market fundamentalists and those that are driving the futures contracts will take notice and change some of their opinions on market direction.
And what are we seeing on the cash side of things?
Cash, we talked about that a factor to watch for would be that the basis would narrow up as given sideways futures and the need to generate purchases of product that you'd see well, in particular, say corn bases start to narrow. When you look at where cash prices are, here the highest cash price in the state, Garden City, 487. That's a 21-cent over basis, and of course we have had times the last 2 years where we've had $1.60 or more positive basis. So it's positive, but it's not a lot positive. The Hutchinson area also positive. That maybe is a little bit of a surprise. 4 cents over at 471 for the top bid. Other areas from 4 cents under to 20 cents under. You do have new crop bids. Again, that are basically ranging from about 457 up to 472 in or 459 in all areas except in the Garden City area in Southwest Kansas where the feedlots are, and that's at 504. And sure, question as to whether that's covering costs or not. And a person can look at our K-State budgets, and if we get good get the yields in those budgets that we're talking about, yeah, we seem to be covering costs, but there's not a lot of extra there. And I would go, I just would say quickly with regard to grain sorghum, you do see a couple bids around the state that are over, where the top bids in some of these areas in Hutchinson, Salina are over $5, about 490 or so in Topeka, and the others are weaker. So that's indicative, I think, of the status of the export market for sorghum. Has been pretty good, but it's choppy up and down. Soybean prices all except for the Garden City area with the 12 in front of them, ranging, Western Kansas, Colby and Garden City about 1153, 1173, and then other parts of the state, you've got the highest price in Hutchinson at 1263, and others about 1218 to 1230 something. Wheat prices all hanging around $6 or 570. One area out in the northwest corner below 550, but that could be a temporary situation. New crop bids for wheat. Again, the best one in Hutchinson, 607, 592 at Salina and Topeka, and others 570, 580, something like that. So these aren't sterling high prices. They're historically we'd call them very good prices compared to where we were back during say 2014 through 2018 or 19, but where we're at now with our higher costs of production, we have a lot of producers that are probably remember where prices came from in the middle of 2023 and are looking for some type of spring price strength that would help strengthen bids and give them better opportunities for sales.
And Dan, wanting to mention a meeting you were just recently a part of, the Western Wisconsin Ag Lender Meeting, and some important details you saw from there.
We tied into that via online means, and in their area, they had strong grain, strong crop yields in the last year. They were thinking they'd have worse. They had pretty low ratings and ended up and had, at least as we'd compare, surprisingly good yields from what I could tell. And of course their farmers, very similar situation to ours. They look at the USDA numbers and are wondering about price direction. So one thing that we had done was to look at where these corn and soybean supply demand balance sheets could change coming up, and where that might take prices. And really for corn, the big issues sitting out there right in front of us would be, well, two of them, that lower prices probably all else being equal, lower corn prices would help on demand. And so we'll see where that happens. If ethanol and livestock feed and export demand can hold decently, if that happens, then that could be price supportive. Again, USDA is projecting about 485. There are scenarios you can put together that take us to $5 to $5.25, and that's what we talked about. And for soybeans, pretty similar situation in that the USDA is projected about $12.90 for prices. And if we come into the January 12th report and they discover more beans yet, well, that number could drop to 12. But really, with what's likely to occur in the USDA's projection of Brazil corn and soybeans being down, they could be down as much as 7, 8, 9 million metric tons. That change the world balance sheet. You could be seeing a lot markedly stronger prices, $1 or $2 or $3 prices for soybeans by the time if the shortfalls that are possible to happen actually do. So really, I think we're standing right now. The next big thing in front of us will be the outcome of some of those South American crop situations and that when we talk, the first time we have a chance to talk after that January report, the first question that you may want to ask me is, well, have we changed our perspective on the markets? We'll have to answer that question. I would not be surprised that the USDA may go partway there, but not all the way, which would kind of be just a moderation. I guess I would be surprised if they actually take off enough production capacity for the Brazilian corn and soybean crops to match what in country people are, again, agricultural concerns in South America are saying about that crop. If they do, then you've got something else to consider and some strength coming back into the markets.
And that USDA WASDE report will just be out a week later after this airs. And so really just kind of waiting to see what those numbers are chosen to be.
Yes, markets will be affected by their expectations, et cetera. There's been forecast of some rainfall in Brazil in particular for about a week here, but then to turn dry thereafter. And so really the question is, can late rainfall help a crop to recover, or will the damage it suffered earlier, which is the driest last quarter of a calendar year ever, is my understanding in some of those key production areas for crops in Brazil, can late moisture overcome the challenges we've seen up front? And perhaps the experience we had in the United States this last year, where we had a lot of concerns about the size of the corn soybean crops, and then late rainfall came in, and voila, those crops came in a lot better than expected. That might be what's weighing on the trade's mind right now.
Dan, I appreciate you taking the time once again to give us our grain market update this week.
Thank you, Shelby. I appreciate it.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but we'll be back with more ahead.